Okay, so magandang araw sa inyong lahat. So for today, we're going to discuss managerial accounting and cost concepts. Okay, so we are going to relate yung concept or yung job or yung function ng isang managerial accountant in relation to the cost concepts or the cost considerations that we're going to encounter as we do our managerial accounting process. So to start with, let us first recall yung mga items or yung mga basic na trabaho ng isang accountant. So we already discussed in our first lesson na a managerial accountant is basically going to be in charge of the planning of or the planning stages of managerial accounting. Okay, in other words, we are going to help management in planning their operations and making decisions with regards to the strategic and tactical plans that the company might need to implement. Yan. So, part of the planning process is to first identify alternatives or what are the choices or what are the options that the company has. Second is to select the alternative or choose the alternative that is going to best achieve the organization's objectives. And then finally, we are going to translate the plan in financial terms and we're going to develop a budget that will fit the decision or the alternative that was chosen. Okay. After the planning stage, we're going to direct and motivate our organization, particularly our human resources, and help employees do their job in also with the goal of attaining the organization's objectives. So including in the directing and motivating phase, will be number one, assigning work or assigning job functions to various employees. Second is providing routine problem solving or guiding them in the routine problem solving in order for us to not repeat instructing them. So we guide them on or we give them instructions on how to solve a particular problem that they may encounter so that the next time that they encounter it again, there will be or less supervision or no supervision would be needed already. Next would be conflict resolution. We already discussed that also. And then of course, effective communications. Okay. Then finally, we are down to our controlling function. So in the controlling function, what we are trying to do is to evaluate or the performance and from the term itself, control the operations and determine feedbacks and accepting also the feedbacks in order for us to determine and to check whether we are able to achieve what is desired. So in the cycle of your planning and control, always remember that since this is a cycle, it is not always that what you initially planned will automatically or immediately be be achieved. Okay, so which means that from your planning stage, which involves decision making, you also go to the implementation stage, and from that point also you also need to implement decision making there. Okay, and then going to measuring your performance or the controlling phase, and then feedback, which is going to be the determination of the variances between the actual and the planned performance. From there, going back again to the cycle. So you're going to plan again in order to improve or maybe develop again additional tactics and strategies in order to improve the company. Okay, so we also discussed in our first lesson the differences between the function of financial accounting and managerial accounting, but basically we need to understand this, okay? Because generally, when we talk about cost considerations and as managerial accountants later on, you also need to determine and know the functions of a financial accountant, and you're going to meet in between because there is a common function or common job, okay, that you need there, and that is the job of the cost accountant, okay, which is in charge of the costs or various costs related to our operations. So with that, we can now proceed to our various cost items related to the production. Okay? Take note, in cost accounting, you already learned these items, but we also need to remember these items because it is, or these costs are actually being used also, or also needed by managerial accountants in making decisions later on. So we already know the concept of direct materials, and we know that direct materials are items that are integral parts of the finished product. In other words, it is considered as direct materials if these items will be part of the finished products or will be part of the finished service that we are going to provide. Yan. So it means that in order for it to be direct materials, it needs to be traced, okay, or traceable directly to the product that we are creating. Next, we have direct labor. Direct labor pertains to the traceable labor or the traceable amount and extent of labor that is used in order to prepare the actual product. So when you talk about direct labor, this pertains to the production or the labor force that are directly related to the production of the main item. Okay? So which means that this labor are hands-on or directly handling the processing, the assembly, okay, and the finishing of the main product. Okay? So an example there is the wage or the salary of the assembly workers. Then finally, we have manufacturing overhead. So manufacturing overhead is the catch-all category, which means that if an item is not categorized as direct material and also not categorized as direct labor, then it's going to be considered as manufacturing overhead. And most of the times, this pertains to your indirect materials and indirect labor and all items that are not classified as direct materials and direct labor. Okay. So we now go to our non-manufacturing costs. Okay. So of course, we already know that our production or our manufacturing costs are composed of 3 items, and those are the items that we discussed already above. That is your direct materials, direct labor, and factory overhead or manufacturing overhead. And also, I hope you also remember that when you talk about prime cost and conversion cost, you know that prime cost is composed of the 2 direct items, which are direct material and direct labor. And when you talk about conversion cost, it pertains to your direct labor and your factory overhead or manufacturing overhead. Okay. Now we go to our non-manufacturing costs, which are usually classified as period costs or items that are not related to the manufacturing of the product, but they are used or they are necessary in order for the company to be able to either sell the product or manage its operations. That's why non-manufacturing costs are classified as either selling costs or administrative costs. And selling cost pertains to costs that we incur in order for us to facilitate the sale of the product or to deliver the product. And then administrative cost pertains to office, organizational, and other clerical costs related to the operations of the company. There. So now, since we are talking about product costs and period costs or manufacturing cost and non-manufacturing cost, always remember that product costs, okay, we already stated that a while ago, that product costs are items or amounts that are capitalized to inventory or capitalized to the finished product and eventually will be recognized as part of cost of goods sold, okay, in our income statement. While your period costs are immediately recognized as expenses, unless of course it pertains to items that are not yet used. In this case, it will be considered as prepaid items. So, going to our balance sheet, just remember the classification of your inventory. Inventory is usually part of the, generally part of your current assets. And when you talk about inventories, it can be classified as either raw materials, work in process, inventory, and finished goods if we are talking about a manufacturing firm. For a merchandising firm, we only have one inventory item, and that is the merchandise inventory, or the finished goods that you acquired for the purpose of reselling it again. There. So if we try to get the definition or the main idea of the different classifications of the inventory, we all know that raw materials pertain to the either direct materials or indirect materials that are needed in or that are waiting in our warehouse for it to be part of the processing of the item or of our main inventory later on. Your work in process are inventories that are not yet finished, or these are partially completed, and of course your finished goods are those that are already completed and are ready for sale. So with that, whenever we have a sales transaction, or whenever we are able to sell already our goods, we are going to prepare our income statement, and your income statement is going to be different between a merchandising and manufacturing company, mainly because a merchandising company will only consider the purchases that will be added to the beginning inventory, and then deducted or to be reduced by your merchandise inventory to ending, okay, so ending merchandise inventory to get the cost of goods sold. On the other hand, a manufacturing company will still need to determine the cost of goods manufactured, which will be determined in our cost of production report. So please recall your topic already in cost accounting. And then to be reduced by the ending finished goods inventory, and that will be the basis of our cost of goods sold. There. So basically, to get the equation, or for us to be able to make sure that our inventories are balanced, all we need to do is to add up the beginning and the beginning balance and the inventory produced, or the inventories during the period, which should be equal to the cost of goods sold, or the items that are used, plus the ending balance. This is actually derived from the equation that we are using in the income statement. Okay. So for the cost of goods manufactured, I hope you can still remember the schedule of the cost of goods manufactured, also known as the cost of production report, is used in order for us to identify how much is the items, or how much or what items were included, and items that were that affected our computation of cost of goods manufactured. So it will start with the calculation of your raw materials used, and then you're going to add the direct labor, and then you're going to add the manufacturing overhead, or the factory overhead, for you to get the total amount of items placed in process. Okay, so you will add the work in process beginning and deduct the work in process ending, and that will be the cost of goods manufactured already. There. Okay, so to sum up, this is what's going to happen. So the cost associated with the production will be the direct materials, direct labor, and manufacturing overhead, and it's going to be part of your production process, which will be initially placed in your balance sheet upon production, and to be transferred to cost of goods sold upon selling. So of course, do not forget to recognize also in your income statement the selling and administrative costs. Okay, that could either be still part of your balance sheet if not yet consumed, but generally, if the problem is silent, all of this period cost will be part of the income statement. So the question there now is, how are we going to predict, okay, the behavior or the flow or the movement of cost, okay, which will now generally cover our variable and fixed cost. Okay, so generally when you talk about variable cost, this is a cost that is fixed when it comes to a per unit basis, but it increases as the production also increases. Okay, so generally that is the definition of your variable cost. Okay, so again, variable cost is a constant amount per unit, but it will increase, okay, for every unit that you are producing. Okay, so An example there would be generally all direct materials and direct labor are variable cost. Okay? Because let's say for example, if you are going to produce, okay? So let's just use this example. If you're going to produce a mobile phone, okay? Each mobile phone needs to have a screen, okay? So the screen is considered to be a variable cost. Why? Because the cost of one unit of the screen, okay, is the same per unit, but for every unit that you are going to produce, it is going to increase the total variable cost. Okay? So basically, it's going to be the same per unit, okay? It's going to be the same per unit, but it's going to increase on a total basis. On the other hand, fixed cost is pertaining to an amount that is fixed or a total amount that is the same throughout a particular relevant range. Okay? In other words, this cost will not change regardless of the number of units that you are going to produce. However, the per unit fixed cost will decrease as you progress in your production. It means that the fixed cost in total is the same. However, the fixed cost per unit will decrease in proportion to the increase of your units produced. There. Okay? So generally, the goal in cost accounting and managerial accounting is to maximize the fixed cost, because if you maximize the fixed cost, it's going to result to a lower amount of total per unit or total unit or total production cost. Okay? It will also result to a decrease in the total expenses of the company. Okay. So generally, this is the best explanation or best relationship that the relationship of the two costs, okay, in our presentation. So again, this is in relation to a relevant range, okay, particularly talking about the fixed cost, because fixed cost will not change within a relevant range, but if we exceed, okay, the first level of relevant range, it means that it is possible that it will increase or it will decrease already. Okay? So variable cost, again in total, it will increase. Okay? It will increase as the units also increase. But on a per unit basis, it will remain the same. The fixed cost will be the same when it comes to the total cost, but it will decrease as the production also increases. So the relationship of variable cost to production will be direct relationship, while the relationship of fixed cost to production will be indirect relationship. So that's basically the end of the discussion of our costs. And the only thing that we need to do right now is to assess ourselves and to determine if we are able to understand the concepts. Okay, and take note, we need to understand these concepts, because when we go back to, or when we progress in our class and we start with the cost volume, profit analysis, our variable and absorption costing, and other costs or other topics, these cost concepts will always be relevant and will always be needed. Okay, so that's the end of this presentation. We'll proceed with the assessment later on.